So looking ahead to the next 6 months for the financial services industry, it's hard to look past around global stagflation. The geopolitical situation is challenging. It's creating upward momentum in terms of inflation, and obviously that has a risk that it's going to feed through in terms of higher interest rates impacting consumer spending. The constraints on the distribution of oil, but also other critical minerals, is also going to have a significant impact. And that impact won't be felt the same everywhere. I think there are going to be hot spots in terms of concerns around growth economically, but also consumer confidence, which will feed through to the financial services industry. I think these issues will feed through to the financial services industry in a range of different ways. One is consumer confidence and spending. The other, importantly, is in the corporate space around the M&A market and the allocation of private capital. The mergers and acquisitions scene globally has been sticky for the last 2 or 3 years for lots of different reasons, as inflation has risen and then slowly come down. And actually the markets were starting to move a little bit more at the beginning of this year, and this is just another choke point which will create caution in terms of deal activity in the coming period. The private credit market has grown exponentially since the financial crisis, but has hit a few challenges more recently with some well-advertised issues around gating and withdrawals. The question mark that underpins that is, is this a fundamental issue for the market, or is this just growing pains as that market continues to broaden and deepen? My own personal view, and speaking to our clients, is that these issues are just a bump on the road towards further maturity in the private markets arena. The private credit industry continues to have and now has a very important structural role. It's not just about leverage finance and supporting the sponsor community. Private credit funds are lending into the real economy in a fundamental way and have a key role to play. Part of the issue is that they have attracted a lot more retail money more recently, which clearly can take a little fright in the instance of wider gyrations within the global economy. And of course, the private credit world is less liquid than perhaps some of those investors may be used to, which is creating some of those gating issues. But I think this is very much a growing pain for the industry rather than something that is of fundamental underlying concern. So the next 6 to 9 months is going to be a very, very important period in terms of the development of stablecoin regimes, particularly in the United States and the United Kingdom. In the US, the rulemaking is now underway to frame the practical implications of the Genius Act. And on the UK side, the Bank of England has already published its proposals around systemic stablecoins, and for other non-systemic payment stablecoins, the FCA rules will be available over the course of the next few months. There's also that question about interoperability between the UK and the US regime. There's been a lot of talk about that. There's a task force that's been set up by the respective treasuries in the US and the UK to specifically look at that. The fruits of that task force will likely emerge over the course of the summer, and it will remain to be seen then what that journey will look like for the US and the UK in particular in terms of taking that stablecoin framework further in terms of tokenization of wholesale markets more generally. One of the most exciting things about the emerging stablecoin frameworks on both sides of the Atlantic is the opportunity that provides to advance the journey towards wholesale tokenization. The biggest issue, or one of the biggest issues on that journey, will be settlement of tokenized transactions in the wholesale environment, and that's really where stablecoins come in and have real value. And there will be a period after stablecoin legislation and regulatory frameworks have been put in place that the FCA and also the SEC will permit a period of ideation of use cases for settlement in that wholesale environment using stablecoins, ultimately leading to potentially those stablecoins being treated as a payment settlement system. Now, there's a lot of work that needs to be done to make that happen, but that is a very exciting opportunity in the period ahead. We hope you have enjoyed this latest edition of Navigator. If you have any questions about anything that you have read in this edition, please don't hesitate to get in touch with me or with your usual Eversheds Sutherland contact.